If you're thinking about building a career in private equity or hedge funds and you are considering a master's in finance as your next step, this video is for you. There's a lot of hype around whether an MIF can truly launch you into these elite finance roles. Some say it's the perfect stepping stone, others call it a myth. So, what's the truth? Hey everyone, welcome back to the channel. I'm Trishna, and in today's video, we are breaking it down in simple terms. What an MIF can do for you, what it can't do, and how the current economic landscape affects your chances of breaking into PE or hedge fund careers. So let's get into it. First, let's talk about private equity. A lot of students believe that completing a master's in finance is a direct ticket to a job in private equity. But the truth is, most PE firms are not hiring directly from MIF programs, at least not for their full-time investment roles. These firms usually prefer candidates who already have experience in investment banking, top-tier consulting, or transaction services. And why is that? Well, mainly because private equity is still very deal-driven. They want people who have actually worked on mergers, acquisitions, financial modeling, and due diligence, and not just studied them. That said, this doesn't mean an MIF can't help you. In fact, it can give you a major technical edge. You'll learn how to build financial models, analyze companies, value businesses, and understand leveraged buyout structures. If you pair that knowledge with internship experience, even with a small PE or VC firm, it can definitely improve your profile. But to land full-time roles at big-name PE firms like KKR, Blackstone, or Carlyle, you usually need some prior work experience that goes beyond classroom learning. Now let's look at the current private equity job market in 2025. Things have shifted in the last 5 years. The high interest rate environment and tighter debt markets caused a slowdown in deal flow from 2022 through early 2024. But recently, firms have started making a comeback, especially in sectors like infrastructure, climate tech, and software. However, PE firms are becoming more selective. They are looking for people who can help create operational value and not just financial returns. That means more emphasis on analytics, growth strategy, and portfolio improvement. So, if you're an MIF student thinking long term, this is actually a good time to enter the industry, but you may need to take a few stepping stones first, like joining an investment bank, working in transaction advisory, or even interning with a search fund or growth equity team. Now, what about hedge funds? Here too, the picture is a bit mixed. Hedge funds are incredibly diverse, from fundamental long or short equity shops to algorithmic trading firms. While some are deeply quantitative, others rely on industry expertise. But generally speaking, hedge funds don't do mass campus recruitment. They prefer candidates who come with clear trading experience, strong coding skills, or prior work in equity research or risk analytics. For MIF students, especially those from quant-heavy programs, hedge funds can be an option, but it's competitive. The most realistic paths are through roles like quant research analyst, data strategist, or portfolio analyst. If your MIF includes machine learning, Python, or time series analysis, and you can show that you have worked on actual datasets or trading strategies, that's going to be a big plus for you. The hedge fund industry in 2025 is going through some changes too. With so much volatility in global markets, hedge funds have actually gained renewed interest from investors. There's been a shift toward multi-strategy and market-neutral funds, especially those that use AI or alternative data. These firms need talent who can bridge finance with data science, and exactly the kind of hybrid skill set some MIT graduates can bring. That said, without relevant internships or side projects like building a portfolio tracker or contributing to a back-tested trading model, it's tough to stand out. The barrier to entry is really high, and most recruiters are looking for proof of hands-on capability, not just academic credentials on papers. So, what does all this mean for you? It means that an MIF alone doesn't guarantee a job in private equity or hedge fund, but it's also not a myth. The reality lies somewhere in between. The MIF is a valuable tool, especially if you use it wisely. So here's how you can improve your chances. First, try to land a relevant internship during or immediately after your program. Whether it's a boutique PE firm, a VC analyst internship, real-world exposure beats theory every time. So you need to focus on that. Secondly, build your technical edge. For PE, that means mastering Excel modeling, LBO case studies, and sector research. For hedge funds, that means improving your programming, understanding portfolio theory, and working on real data sets. Thirdly, network intentionally. Reach out to alumni, attend finance conferences, and stay active on platforms like LinkedIn. Many smaller firms don't post jobs publicly, they rely on referrals and targeted outreach. Fourthly, be flexible. You might not land a PE or hedge fund role right out of your MIF degree, but joining a related industry like investment banking, equity research, or strategic consulting can be a smart first step. You build experience, expand your network, and become a stronger candidate later. Another point that often gets overlooked is not all MIF programs are equal when it comes to placement in these sectors. Programs like MIT Sloan, Princeton, Chicago Booth, and Carnegie Mellon's MSCF have better success because they combine technical depth with strong industry ties, of course. Some even have dedicated placement teams or alumni networks within private capital firms. And that is why it's very important to choose your program strategically based on what's your long-term career goals. It's also important to be honest with yourself about it. Private equity and hedge fund roles can be intense, long hours, high pressure, and very little structure. They are not for everyone. But if you're someone who enjoys solving complex problems, thrives on analysis, and likes being close to high stakes decision, these paths can be incredibly rewarding. So to wrap it all up, can an MIF lead to a job in private equity or a hedge fund? Yes, but it is not a straight ticket. You'll need to plan carefully, develop relevant skills, and sometimes take a few stepping stones along the way. The MIF is a launch pad, but how far you fly depends on what you build on top of it. Well, that was all for today's video. Thanks for watching. If you found this video helpful, don't forget to like, share, subscribe, and leave your questions in the comments. We would love to help you out.